Hey guys, what's up? Welcome to this channel. It's your boy Sammy. In today's video, I'm going to be showing you some of the mistakes that beginners traders make in their trading journey. Now, as a beginner, it might be very difficult for you to be able to identify if a market is actually changing its structure. Now, I need to understand something. If the market is turning bearish from the higher time frame, if it's turning bearish from the higher time frame, it will actually take, let's say for the monthly, it will take a month for each of these candles to be formed before reversing. Now, if you come to the lower time frame, you might think the market has actually changed its structure, but whereas it is still actually on the retracement move. Okay, this is one of the mistakes that I make. That's why it is good for traders to understand what the higher time frame is saying. That way, you're able to stay profitable on the long run, and you're able to make your check. Now, if you look closely on the chart, you will notice something happening here. Please, before we dive right in, I would like you to subscribe if this is the first time of watching our video, or leave a comment in the section below. Okay, now if you notice in this section, this market has actually been bearish all this while. It's actually been bearish all this while. But what did we see here? We saw price going up. Now, someone going to the lower time frame will see that this whole candles here were actually bullish. Okay, we are bullish momentarily, but that doesn't mean the trend has changed. Being the fact that the trend line has been broken, for those guys that are following me into trend trading strategy, it doesn't really mean that the market has changed structure. It simply means that the market is actually on the retracement move. Like I said, the market move on the zigzag form now. So if you're able to stay profitable, you have to follow the trend. This market has not turned bullish. It's actually on the retracement move. Now let's look from this zone here. If you look closely, you see this market has been on the downturn. Now, for a video that I dropped some time ago, you will notice that this market has what break. Now, if we draw this whole move here, it shows this market. This is the original trend line. Okay, this is the original trend line. This shows that this market has actually what being in this range. It shows that we are still bearish. All this thing happening here, we can sell for 30 minutes, and immediately we get a breakout here and the retracement move here, and the market start coming back here. Now, there's something I want to outline here. This is it. Whenever you see some folks, like, it's very necessary to look at the higher time frame. Whenever you see something like this, I always draw a trend line, waiting for the market to come to touch this main trend line. Okay, this is the 4 hours trend line. Okay, that I drew. I'm waiting for the market to come and touch it, and it did touch it and came back down, breaking structure, then retraced back to the trend line that I drew before dropping to the downside. Now let me take this out so you can see it clearly. Okay, this is where the market retraced back to the trend line, and we're able to take price to the downside. Now, some other folks, there was a mistake I was always making. When I go down to the lower time frame, I will notice that this market is actually bullish, and I'm looking for opportunity to buy. Well, not knowing that I'm trading up of a retracement move. Okay, not knowing that I'm actually trading up a retracement move. The best way to stay profitable is to draw your trend line in the 4 hours. After drawing the trend line in the 4 hours, wait for the market to come to an area of value. Where's the area of value? It is the trend line. Okay, in the 4 hours, I'm not talking about the 30 minutes. Okay, it's the 4 hours. If it comes to the 4 hours here, you can actually enter here, or you wait for a break of one trend line. If you have the trend line here, all this move here is actually what a retracement move. Now there's a take that I need you to take away from this video, and that is this: whenever you see these little candles, they show a retracement move. Okay, in the higher time frame, whereas in the main trend, you will notice the candles are actually big. The bearish candles are actually what big. They're actually big in size, whereas the retracement move, the bullish candles, because it is not the buyers that are dominating, they're actually small. They're actually what small, irrespective of where they are in the trend. Okay, they're actually what small. Now there's something that I wanted to align, which was the major reason I wanted to drop this course. If you notice, this trend line was here, the major trend line. Now it has been broken. Should we say we are actually bearish? Yeah, kind of momentarily, but this market is still what? Should we say we are bullish? Sorry, momentarily we are bullish, but the market is actually still bearish. It's going to be turning bearish. It's going to be turning bearish any moment soon. All we have to do is look for opportunity. While when it what turns what bearish, for us to start riding price to the downside back again. Okay, so coming here to look for opportunities to buy. Now there's a question that someone might be asking: how long am I willing to wait for this market to turn bearish? How long am I going to wait, yeah, for this market to turn bearish before entry? Well, I can't say per se, because like we know, it takes 4 hours for each of these candles to be formed. Take 4 hours for each of these candles to be formed. So 4 hours, yeah, that was what it took to get to this point. So we have to wait. That is why we said in forex market it is 80% waiting, 10% buying, 10% what, selling. So patient is the higher what, higher chances. Now the reason that I love trading gold was the reason that I told myself that I'm going to be waiting for gold, because gold give me reward for my patience. Just like a little pips move can give you 100 times and 10 times of what you risk. Okay, 50 times of 5 times of what you risk. So you have to stick to a trade that works for what works for you, and that way you're able to stay what profitable in what the market. So that's all for this video. Please like, share, and comment.